Welcome everyone to HueFin News. Today is March 20, 2019. Your source of news before any trade decision. We're going to talk about Tesla today. We ran across this article from Investor Place, and it's talking about one of the main problems that is facing this stock, which is the management. We're going to look at this article to see if in fact the long-term movement of Tesla is going to continue to show us weakness and movement to the downside. See, that's our purpose. We're here to translate to you what the price chart is insinuating to us, and in fact it should tell us exactly whether or not this article that we're going to look at today, if it's actually telling us the accurate truth, or are they just trying to sway us in a certain direction in the market. Okay, so we do appreciate you taking out the opportunity to view this video. If you do like it, make sure that you go ahead and like and share it. Go ahead and check out our website, HueFinancial.com. We place most of our news according to the charts there on that website. And as well, go ahead and subscribe. So now let's get into it. This article was written by Vince Martin. Okay, he is an Investor Place contributor, and it was posted today on the internet. Now, there is a battleground going on between the bulls and the bears in the Tesla stock. You got those euphoric bears in the space that sees Elon Musk as if he can't do no wrong. The bears think that, considering the management aspect of this company and many other things that Elon Musk is doing, that this stock would literally go down to zero. Okay, so this is how this article starts out. The bears think that the Tesla stock price will eventually near zero as its finances collapse. The bulls think, though, that Tesla has some of the best cars in the world and a CEO who has undertaken a very, very optimistic, bold mission to fight a corrupt system, making Tesla stock undervalued. The battle, for the most part, has proven to be a stalemate. As you all will see on the price chart, Tesla has just been traded within the consolidational range, and it's been about, I would say, 2 years. Tesla stock has traded sideways for close to 2 years. The bears, those who want the stock price to go down, have been winning of late. Tesla price has dropped 25% from its early December highs, where it was around $375, and now Tesla stock price has bounced yet again in a recent session. If you guys can remember our video from couple of days ago about Tesla, we told you all that we were seeing Tesla continue to move to the downside, but that $260 price in Tesla can be an area of support, and that is where Tesla is currently finding a minor area of support. So now, noise about the stock. There have been battles going on between Elon Musk and the SEC, battles on Twitter between some of the statements that Elon has made, and he had to backtrack those commentaries. In order for us to see a continuation of higher prices in Tesla stock, understand that this company will have to be one of the best auto manufacturers of all time. This is what this article is insinuating. The bulls have to argue that the outlook of Tesla is positive for reasons that go well beyond automobiles. Between Tesla's solar business, the Powerwall, and battery technology, Tesla can revolutionize the entire global energy industry. It's that potential which drives Uber bulls to suggest that Tesla stock could eventually be worth thousands of dollars per share. But to reach that point, Tesla has to win in automobiles first, and this is what this article is mainly about: is automobile sector and all the problems that is going on with it. It's a tough win in the automotive industry. Okay, it's cyclical, it is capital intensive, brutally competitive industry. Major U.S. manufacturers, only Tesla, okay, out of all of the car manufacturers in the United States, Tesla and Ford are the only car companies that have avoided bankruptcy. Margins are ultra thin, which keeps profitability down even in the good times. while significant fixed costs turn these profits negative in a hurry, especially when sales decline. And guess what? Elon knows that. During the Model 3 ramp, he tweeted that the company had gone from production hell to delivery logistics hell. But Tesla believes it will be the best in the long term. It's targeted about 25% gross margins, even for the $35,000 Model 3. And outside experts think the car's margins can reach 30%. The 25% figure alone would even be one of the best in the industry if they're able to obtain that percentage. Now, we're going to get into the problem with this particular company. And the first thing that this article goes into, it is going to talk about Musk's credibility. Okay, it has been eroded by the years of his many broken promises, and those promises go beyond being overly aggressive with his timelines of when production of the Model 3 was going to start. This is one of them. Musk tweeted in October that the company started building its own car carrier trailers. He used the same platform the next month in November to tell investors that we bought some trucking companies and secured contracts with major haulers. But then when you look at the public records, the financial records of Tesla, they only made one acquisition related to the car carriers, and that was in January of 2019. And since then, there's been no mention of the carrier since then. Another thing that is a problem with Tesla is that their top management, their major executive employees, are fleeing. Tesla's CFO left, the chief financial officer left, and was replaced, okay, by a 34-year-old with no experience. The general counsel, his legal department, one in his legal department. So you have high-level CFO dealing with the money left. You have your legal sidearm leaving. The general counsel departed after Musk tweeted that led to the SEC to seek a contempt of court order against him. And then the senior director of engineering left in January. All of this top management individuals that has the ability to push and sway the company in a visionary direction are all leaving. When you see top management leaving a particular company, it is definitely something to be worried about, because it's the top level that funnels the visionary and the mission statement of a company down to everyone else. And then in September, the vice president of the Gigafactory and then the vice president of manufacturing all left. Musk made a serious error, okay? And it's an error that Tesla bulls, those who want the price to go higher, need to take seriously. This isn't a case of the commonly alleged FUD, fear, uncertainty, and doubt, is what people call it, coming from the shorts. It's a move that calls into question Musk's ability to make Tesla the best automotive manufacturer, particularly with so little outside help. Here it is, the store closures. It's hard to remember a more poorly executed move by any company than Tesla's recent store closing. Okay, at the end of February, he announced that they were going to close all of their stores and go strictly to online sales. The 35,000 Model 3 was finally available, which was good from that perspective. But in that same announcement, they're going to close all their stores. Now, what they didn't realize is that once they close these stores, they still have obligations to pay the leases on those buildings. Now, if they were able to successfully move their car sales strictly online, that move would have cut costs at least by 6%. Now, that's according to the company, Tesla. That would allow them to sell their Model 3s at $35,000. The move to close all the stores and go strictly to online sales blindsided the employees. As many observers have pointed out, the decision came 9 days after the company's 10-K filing repeatedly cited plans to expand Tesla's retail footprint. So 9 days after you file this report with the SEC, the 10-K, you come out and say that you are not going to expand your retail footprint. And then Tesla somehow seemed to have forgotten that it owed more than $1 billion for leases on those stores that they were planning on closing. And once they figured that out, they quickly abrupted from that decision of going strictly online. And now they're going to keep some of the stores open. So there you go. Tesla backtracked. Some stores that were closed will be reopened, and about 20% of locations are under review, quote unquote. And the company prices now are rising about 3% because they didn't take that into account, that they will still have to pay $1 billion for all of those leases on those stores, even though the Model 3 is still going to be sold for $35,000. Now, this execution was nothing short of disastrous. It's created a major problem for the owners of Tesla stock. And then on top of that, the Tesla employees at those dealerships had no idea what to do at that particular moment. They had test drives were canceled and then they were reinstated. Even Electric, which is a magazine internet company that speaks on vehicles, which is always sympathetic to Tesla's cause, pointed out that the move would lead to massive pay cuts for its employees. Now, let's get into it and see what it means for the stock. So Tesla changed a significant part of its go-to market strategy seemingly on a whim. Again, the move came 9 days after the company said that it was expanding its retail operations. As the Wall Street Journal pointed out, Tesla has signed new leases this year alone. Then there's another problem. If Tesla is only cutting prices by 3% instead of the 6%, because its showrooms will stay open, but is not going to raise the price of a Model 3, then it's clear that their gross margins are going to be slashed as well. So the Model 3 won't be as profitable as Elon had anticipated. That suggests that the company's 25% gross margin target will be dropped by at least 3%, which is going to be around 22%. Another issue is the management. Close to zero thought went into the decision to close the stores, and you could clearly tell how in one moment they went ahead and decided to close all stores. The next moment, immediately they backtracked and changed their mind and said, we're going to keep some of them open and the others are under review. That tells you that there is no accountability, and those, I guess, when you have such a mass exodus of those in higher positions, you literally would have to get with those who have zero experience or ones who don't have any experience, and you're trying to call all the shots without having all the information available to you to make a sound decision. It appears likely that Tesla's management, including Musk, was unaware the move would cost it over $1 billion upfront. It disrupted customer service and raised their own employees and upended its future negotiating position with landlords for essentially nothing. A company already fighting for razor-thin margins in a tough industry, the car industry, can't do anything like that. They have no room to cause mistakes of that particular nature. Those who are still expecting Tesla to continue to move to the upside are expecting Tesla to continue to outperform giants, yet it's acting like a mismanaged startup. That's a huge problem for Tesla stock and should dissuade investors from buying Tesla stock when its market cap is nearly $50 billion. So now, looking at the price chart for Tesla, let's give you all an update of what we've seen for this particular stock. The market, we were expecting to continue to move to the downside, which we are still seeing. It's very positive to see this particular market hold above 260 and 270 at this particular time. But again, we're not seeing, even on the weekly time frame, a lot of indication that Tesla stock is ready and willing to move to the upside. Especially here on the monthly time frame, we might hold some consolidational trading in the next following months. Preferably, I will say April and possibly May. We might bounce between 260 and 300. But overall, considering that we don't have a lot of positivity being seen in the news, in the media, on articles, whatever the case may be, we are not expecting Tesla in the long term to continue to show us its ability to move to the upside. In the near term, yes, consolidational trading is still expected. And another thing, this particular stock is still staying above this essential line. A bearish sentiment would definitely be present once we see Tesla break below this essential line. Now, we're definitely trading there now. We are definitely in a current move of weakness in Tesla. This stock definitely is weak, and we are still expecting it to continue to show us weakness. But again, just like I said in my last video, 260 even down to this essential line, we are still expecting the stock to try to hold some support. So overall, this article definitely is correlating with the price chart. A lot of the people who have a vested interest in this particular company, in this stock, are definitely noticing some changes on the horizon that is making it less likely to move to the upside. Okay. Even when they came out with their Model Y, it didn't get a lot of the interest that many people expected. They were expecting this reveal to at least give it some gas behind it to where it could push this price higher. And literally it went to no avail, and nothing really happened to this company. So the only way that Tesla will be able to really allow itself to continue to move to the upside is if they perform on their delivery goals on the Model 3 and the other models of cars that they have. So right now, the analysis for Tesla is still for it to move to the downside. Near-term movement, consolidational trading, we said 260 to 300 for that consolidational trading. But that long-term move, we are not seeing the continuation high prices right now. Give us your thoughts, give us your opinions about this article. We will have a link of it in the description of our video, just so you can all continue to read it if you want to. But overall, it is definitely correlating with the price chart, so we will be in agreement with the article along with the price chart and the sentiment in this stock, which is weakness and continuation to go down. So that's our analysis for Tesla stock today. We do appreciate you all taking out the opportunity out to watch this video. Make sure y'all maintain your profitability, and I will see you all later.